Utilico Emerging Markets Trust invests in emerging markets, and Jacqueline Broers, Deputy Portfolio Manager at Utilico, analyses the growth and investment potential of Vietnam in Southeast Asia. Vietnam is one of the world's 20 fastest growing economies. In 2024, Vietnam's GDP is forecast to be 5.8% and 6.9% in 2025, against a global average of 2.3%. So, what's driving this growth? The country has strong underlying growth fundamentals driven by population demographics. 99 million people live in Vietnam with an average age of just 33, which should provide 10 or more years of increasing consumption as the average age reaches 45 and people become more affluent. Utilico believe the increase in per capita GDP will drive a better quality of life and higher wages. As this urbanisation slide illustrates, the trend is set to continue, with 40% in 2024 set to reach 44% by 2030. Urbanisation typically brings improved productivity and subsequent economies of scale. These urbanisation rates are still lower than Thailand at 52.9%, Indonesia at 57.8%, and China at 63.6%. Utilico believes that growth and urbanisation brings investment opportunities in the telecom, utilities and infrastructure sectors which support it. Vietnam's per capita GDP has trebled since Vietnam joined the World Trade Organization in 2007, which has led to a growing middle class. Vietnam's goal is to be an upper middle income country by 2035 and a high income country by 2045. It is also estimated to add 36 million people to the consuming class in the next decade. Utilico sees that Vietnam benefits from a highly educated and affordable workforce. As this slide shows, Vietnam's population is more highly educated than most ASEAN peers, with a PISA ranking of 468 and 98% adult literacy rates, the second highest among the top 10 investable frontier countries. This is why Vietnam has started to attract more manufacturing business from foreign investors. Vietnam is clearly benefiting from the China Plus One model and is successfully attracting manufacturers seeking a diversified supply chain. For example, Apple has already located some MacBook production there and has plans to develop capacity for further product development. UEM see this influx of foreign direct investment as strong and sustainable, driving industrialization and enabling Vietnam to manufacture higher-end products. Over 10 years, the country has seen a 7.7% rise in the compound annual growth rate, or CAGR. Vietnam has benefited from the increased geopolitical tensions between the US and China and has cultivated good relations with both countries, aiming for increased FDI from the US and potentially direct and stronger economic ties with China. Utilico appreciates that Vietnam has teething issues, however. Liquidity tightening, anti-corruption measures and the arrest of several business leaders led to the VNI, the Vietnam Stock Index, falling 33% in 2022. This slowed public investment, made obtaining government approvals for private investment challenging, and more will need to be done in the medium term to restore public and private investor confidence to match the country's growth aspirations. Most Vietnamese manufactured goods are exported, with 25% of those sent to the US. And in 2023, exports to the States fell by 4.4%. However, supply chain issues appear to have calmed, and 2024 should see export improvements. In summary, if the Vietnamese government can navigate these factors well, Utilico believes that Vietnam could potentially become the investment darling of Asia. For more insights from Utilico Emerging Markets Trust, please go to the Investment Trust section of the London South East website.